Good day to you, traders. Welcome back to our training. Alright, most traders get caught up in indicators, but the real key to success lies in understanding market structure. Today, I'll break down how to read price action like a pro so you can predict price movements before they happen. So let's dive in. Now, what is market structure? Market structure is a natural flow of price movement. That is, the movement of price naturally up and down in the market. It consists of the uptrends, downtrends, and consolidation. Now, in uptrends we have higher highs and higher lows, while in downtrends we have lower highs and lower lows. While for consolidation we have price moving sideways. At least there's no clear trend. Now, a tip for you guys: learn to recognize structure shifts early to catch reversals before the crowd. You get to understand what I mean by that later on as we progress in our training. Alright, break of structure versus the change of character. Now, a break of structure is a confirmation that a trend is changed. That is the definition for a break of structure. In a situation whereby price was bullish, then we had a change to the bearish side. Okay, while for a change of character is a signal for a potential reversal. That is just a short-term change in price, and then we had a continuation to the usual trend. Now, for example, if price makes a higher high but then suddenly breaks a previous low, the trend might be shifting. Now, example of that is if price makes a higher high now and then suddenly breaks the previous low. This was the previous low. That might mean that price has shifted to the downside, but it is still not a shift until price takes out the low that was created after the shift. If price takes out this low, that's a shift in structure. But if price doesn't and stops around this level before turning back to the upside again, that is just a change of character. Understand? Alright, let's move on in our explanation. Okay, now another tip for you guys: always wait for confirmation before entering trades. You don't take your trades without no confirmations. Like I said in the last few videos, you need to wait for confirmations before you take any trades in the market. You need to know where price is headed before you take your trades. Now, how to identify strong market structure levels. We have done a video on this support and resistance zones. Now, for you to get your strong market structure levels, you need to look for levels where price has reacted multiple times. Those levels where price keeps reacting to going up and down is where you mark to be your strong support and resistance levels. Like we did some examples on that in the last video. We said we could also use round numbers to find out strong structure levels. Also, we could use higher time frame levels, which is the daily and the 4-hour, which are more reliable to find out those structural levels. Now we'll move to how to trade market structure like a pro. Now, this will show you a step-by-step trading plan on how to do so. Now, first, you identify your market trend, which is your higher highs and higher lows, which is for uptrend. Likewise, your lower highs and lower lows for the downtrend. So that's the first thing we do now. Let's do an example for the uptrend first. Now, let's move to a lower time frame so we can get to see some better price movements. Now, let's deal with this here. This price movement from here upwards. Okay, now at first we're having lower highs, but then price came back and reacted to this lower low here and then made a change. Sorry, that's we created a lower low here, a lower high, then a lower low. Let me start that over. Now we had a higher high here, then we created a lower low, a lower high, a lower low again, then price broke structure, giving us a shift in market structure. After the break of structure, we had a retest to this level here. Like we said, we mark out our key strong levels on the chart. Now this was a strong level, that's why price came back to this level here, and then we had a final break to the upside again, giving us a higher high, a lower high, a higher high again, a lower high, a higher low, a lower high again, a lower high, a higher low, then a lower low, then a higher high again. You see in here we started having consolidation. This is what we call consolidation in the markets. Alright, while this here is when we had price giving us higher highs. This is an uptrend. This is a wonderful uptrend here. All that happened in here was a beautiful uptrend. That was a very much beautiful uptrend. Okay, now for the downtrend, let me do an example of that as well. Okay, all right, now for the downtrend, you see price first created a higher high, a lower low, then created a higher low, a lower high, then a lower low, a higher low, a lower low, higher high, lower low, higher high, then a lower low again. So you can see in here, although the price action might not be very much clean, but price kept moving to the downside all along. If you look well, you see price kept taking out the lower lows. Price took out this low here. It also took out this low again. Then this low was taken out again, and then before this low was finally created, and then we started having the moves upward again. Understand? So this is what a downtrend looks like continuously. Okay, now we have identified our market trend, which is the higher highs and higher lows. Now for we to take wonderful trades, we want to always wait for pullbacks. That is, those comebacks, we have to wait for them. Now you notice when price drove down here, we had a comeback, reaction, a right down again, reaction again, a right down again, and then a reaction again, and then a right down again. So if you want to take our trades, we always want to wait for the pullback. So if we were to take a trade, that would be a trade from here, our stop loss above this higher high, and then we target the next lower low, which was this low here. If we were to take another trade, another short position, that will be we wait for price to retrace back to this higher high, which it did, and then our stop loss will be above this higher high here, and then we target the next lower low. So like that is how we keep trading continuously. You understand? Alright, then your stop loss, I just showed you how to do that. Your take profits as well. Okay, we've done an example of that, and I guess you all can understand perfectly how this work in the market. Okay, I'm going to do one more example for you guys so you can grasp exactly what we're doing here in the market. Alright, now let me use a higher time frame. I'm going to start with this highest high here. Okay, now if you look very well on my chart here, you will notice, let me use the path tool, this was the highest high formed, then we had this low created, then price did what? A comeback. Like we're saying here, we want to wait for pullbacks. We want to wait for a pullback to a key level. Now you notice this was also a key level. This was around 29.55. That's around 29.50, so we can as well call it a key level. Then from there, price gave us a sweep down again, giving us a break of structure, then consolidation for a while, liquidity grab, and then a swift move back to the downside again. Now this is a tip for you guys. Whenever price comes back to a previous key level, there's a high probability that it will go even further more than it went the first time after a clear break of structure. That's a tip for you guys. Make sure to keep that in mind. Alright, so that's an example. Now if we were to take that trade, like I said earlier, we'll have waited for the pullback, which was this. We'll have taken our trade from here and then set our stop loss above the highest high. Which is the higher high here, and then we target the lower low, which is the lowest low on the price action at that moment. Then we'll have been having a risk to reward of 1:2. See how pretty cool that is. You see? Then if we were to take the second entry, when price broke this low, now we'll have waited for a comeback for price to retest this high again, which it did, but with a liquidity grab. Then we'll have taken our entry and put our stop loss above this higher high again. Then we target the next lower low. Listen, so that's how we keep moving downwards and downwards until we see a switch in the trend again. Yeah, cool. So I believe that you all should now understand exactly what market structure is, and you should be able to trade with it like a pro. Okay, so make sure to like this video and subscribe to my channel, and also do switch on your notifications so you can get new video notifications when I do release them. Alright then, bye for now and peace out.